Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Thursday, June 4th. Firstly to the S&P 500, and a change of trend today and very strong selling coming into the market for today's session. A very large black body candle, very similar size to a black body that we saw about a week and a half ago. That candle from the past found support around the 2100 level and around the Kijun-sen indicator. Very much different for today's trading. The sellers were able to breach and close down below the 2100 level and the Kijun-sen indicator, so suggesting that the market probably has a little bit more downside momentum at the moment. The problem for the sellers here is going to be potentially strong support around the top of the Ichimoku cloud, extending from 2092 down to about the 2082 level, and then this large zone of potential support extending all the way down to 2040. So a very large amount of support down below before we're going to see a good strong confirmation of a significant change of trend in the longer term time frame. This is a very bearish candle, however, and with the sellers finding very strong downside momentum and the strong price rejection from above the Tenkan-sen from the previous couple of days trading, it does suggest that we could see some follow through into the cloud. But I'll be watching the bottom of the cloud very closely if we do see the market trade into the cloud for the next day's trading, and that's around that 2082 level. Moving next to the Dow 30, and a little bit different this candle, a fairly similar type of candle, very similar to one that occurred about a week and a half ago, and a change of trend today. Large black body suggesting strong selling coming to the market, the sellers closing with control, showing strong commitment. But the important thing here is, number one, we've breached the Kijun-sen as we saw with the S&P, and more importantly, however, we've seen the market trade into the highlighted yellow zone of previous support, and even more important than that is the breach down below the Ichimoku cloud. And this suggests that if we do see some strong follow through, we certainly may have the beginning of a new major longer term downtrend in place. Now, what I'd like to see, however, would be for the market to clear down through the 17,735 level and down below the bottom of this highlighted zone around the 17,687 area. This zone has been a very important area in the recent past, and we have seen buying coming in. Even that zone now extends down to about the 17,600 area. Importantly, however, we did see this bearish breakout down below the Ichimoku cloud, but it was a very thin part of the cloud, so it didn't really take a lot of pressure from the sellers to breach that area. But what's going to be important is the follow through after this candle. Moving next to the NASDAQ 100, and a very different type of candle here. We did have a change of trend. We do have a black body, but the size of the black body is very much smaller than the size of the black body with the S&P and the Dow 30. We have the sellers not closing with a strong control. We have a smaller or larger shadow on the bottom of this candle, and it represents the sellers losing commitment, and the sellers lost commitment around that previous major high at 44.83, 44.84, and with the market unable to close down below there, that's going to be the benchmark for tomorrow's trading, and whether the sellers are strong enough to breach down through that area. Now, we also saw the buyers attempting to trade up above the Tenkan-sen indicator and the 45.10 level of previous resistance, and we've seen some fairly strong rejection from there. And as I've said, the sellers have taken control, not as strong control in this candle as with the other candles, but they still have taken control, and we haven't seen any strength from the buyers here, really. So really, with the NASDAQ 100 moving forward, 44.83, 44.84 is important, and then if we do trade lower, watching potential support at the Kijun-sen indicator at 44.50. Now, just looking at some of the asset class ETFs and looking at them in relation to the SPY ETF, which represents the S&P 500, the US equity markets, and Here we have the selling in this market today. VEU is the ETF. It's the Vanguard FTSE All World Index, which is without the US index, US equities included, and very similar type of candle here. A black body candle, sellers in control, but this candle trading within the Ichimoku cloud, so a neutral market in the longer term time frame, trading down below the Kijun-sen indicator. And importantly, if we look at the relative strength comparative here to the SPY ETF, the US equities, we see that we have the VEU ETF strongly underperforming the US equities market here. So one that we should be allocating away from. Looking next at the FTSE Global Real Estate Index ETF. And this is X the US real estate funds as well, and we're comparing that to the S&P as well. So comparing the equities market outside of the properties market outside of the US to the equities market in the US, and we see the market trading down through the Ichimoku cloud in a bearish manner. Very strong trend in all three timeframes, and in terms of relative strength, very strongly underperforming the SPY ETF. Volatility is continuing to trend up very strongly off a cyclical low, and this suggests that we certainly could see continued downside in this ETF. Next to the Vanguard Real Estate Index ETF, VNQ is the code, and that's the one that's trading within the US, and comparing that to the equities market. And we see strong trading down below the Ichimoku cloud, the Kijun-sen and Tenkan-sen, so some very negative bias, strong negative bias in all three timeframes, supported by the Chica span. Potential for support coming in at this previous swing low around 77.72, and the market has almost touched down to that level on an indecisive spinning top type candle. So there's potential for this ETF to start trending up in the first term time frame. But if we look at the performance against the SPY, underperforming generally for quite some time, and then for the prior week or so some equal performance, and then just in the last few days some strong underperformance. At a cyclical low, so potential for for volatility to come into the market, and that could manifest itself as trending price action. It could be very dangerous if that trend breaches that previous swing low to the downside. Next, comparing to GLD, which is the Gold Trust ETF. So comparing the equities market to the basically the gold sector, which we can trade as an ETF here, and we see strong trading activity down below the Ichimoku cloud and each of the indicators. Not as clear cut with the Chica span. It's been trading down below and then within the price action, and at the moment it is below the price action, so suggesting that we have some downside momentum. A swing low down at 112.23 could see some support come into this market. It has been a very strong area in the recent past. Looking at the performance, underperforming the equities market, the US equities market represented by the SPY ETF, but not terribly strongly, not trading significantly down below that lower band, but still underperforming, but not in a major way. And then moving to the bond fund ETF, TLT is the code. It's the 20+ year Treasury bonds, and we see a change of trend today in the first term time frame. The buyers coming into the market, so something of a reallocation away from the equities market into the bonds here, but it's a very short term time frame, and there's a possibility we could continue to see a bounce, but we are likely to see this ETF find some resistance around the Tenkan-sen indicator, which trades at 120.38, and then if that rally does continue, potentially strong resistance at 121.82 at the Kijun-sen indicator. Some previous very strong relative underperformance against the equities market, and now trading within the bands and suggesting that there is a very, very mild underperformance over the last couple of trading days. Volatility is at something of a potential cyclical low. There is an opportunity for volatility to start trending up, and that could manifest itself as trending price action, and that could be a strong uptrend in that first term time frame. But the suggestion here is that any potential rally here may be temporary.